What is a pip in Forex and how do you calculate it? Have you ever heard Forex traders say, "I made 50 pips today," and wondered what that actually means? If you don't understand what a pip is, you're missing one of the most important concepts in Forex trading. In this video, I'll explain what a pip is, how to calculate it, and why every beginner needs to understand it before placing a trade. Let's get started. Pip. It's one of the first words you'll hear in Forex trading, and honestly, one of the most confusing for beginners. But once you understand what a pip actually is, everything else, position sizing, stop losses, profit targets, starts to make sense. In this video, I'll break down exactly what a pip is, how to calculate it, and how to use it to manage your trades properly. One of the first terms you'll hear in Forex trading is pip. Whether you're calculating profits, losses, or managing risk, pips are used in almost every trade. The good news is that once you understand pips, Forex trading becomes much easier to follow. Section 1. What is a pip? Pip stands for percentage in point, and it's the standard unit used to measure price movement in Forex. For most currency pairs, a pip is the fourth decimal place in the price. So if your USD moves from 1.1050 to 1.1051, that's a 1 pip move. It sounds like a small detail, but every profit, loss, spread, and stop loss you'll ever calculate in Forex comes back to this single unit. Section 2. The Japanese yen exception. Here's where beginners get tripped up. Most currency pairs use 4 decimal places, but pairs involving the Japanese yen only use 2. So for USD, JPY, a pip is the second decimal place, not the fourth. If USD, JPY moves from 145.00 to 145.01, that's 1 pip. This exception catches a lot of new traders off guard, so it's worth remembering any time yen pairs are involved. Section 3. What is a pipette? You might also notice a fifth decimal place on some platforms. That's called a pipette, or a fractional pip. It represents 1/10 of a pip and gives slightly more precise pricing. You don't need to worry about pipettes too much as a beginner, but it's useful to know why that extra digit is there so it doesn't confuse you when you're reading a price quote. Section 4. How to calculate pip value. Now here's the part that actually matters for your trading, calculating pip value, which tells you how much money 1 pip is worth based on your position size. For a standard lot, which is 100,000 units of currency, on a pair where the US dollar is the quote currency, like EUR, USD, 1 pip is typically worth $10. For a mini lot, which is 10,000 units, 1 pip is worth $1. And for a micro lot, which is 1,000 units, 1 pip is worth 10 cents. So if you enter a trade with a mini lot and the price moves 15 pips in your favor, that's a $15 profit. If it moves 15 pips against you, that's a $15 loss. This is exactly why understanding pip value matters. It directly tells you your risk and reward in real dollar terms, not just price movement on a chart. Section 5. Why pips matter for risk management. Pips are the foundation of proper risk management. When you set a stop loss, you're not just picking a random price. You're defining your risk in pips, and then in dollars, based on your position size. For example, if you're risking 20 pips on a mini lot, that's a $20 risk. Once you know that, you can decide if that fits within your 1 to 2% risk rule for your account. Without understanding pips, it's nearly impossible to manage risk accurately. Section 6. A quick practice example. Let's do a quick example together. Say you enter a EUR, USD buy at 1.1050, with a stop loss at 1.1030. That's a 20 pip risk. If you're trading 1 mini lot, that's a $20 risk on this trade. Now say your take profit is at 1.1090. That's a 40 pip target, or $40 potential profit. That gives you a 1 to 2 risk to reward ratio, which is a healthy target to aim for as a beginner. Let's recap. A pip is the standard unit of price movement in Forex, usually the fourth decimal place, or the second for yen pairs. Pip value depends on your position size, $10 for a standard lot, $1 for a mini lot, and 10 cents for a micro lot on dollar-quoted pairs. And understanding pips is essential for calculating your real dollar risk on every trade. If this cleared things up, hit subscribe. I'm covering essential Forex concepts like this every week to help you build a solid foundation. Drop a comment if you want me to break down lot sizes and position sizing next. Thanks for watching, and I'll see you in the next one.